What is going on, everybody? Welcome to the free course where I'm going to give you my exact strategy. And I'm super excited about this because I want more and more people to know about this. So with that being said, we're going to jump right into this. As you guys can see behind me here, I got Robinhood. I chose this because I use Thinkorswim platform the most, or E-Trade Pro. You guys are more than likely going to start on Robinhood, or maybe some of you guys have Charles Schwab, or wherever your 401k is going to be, or something like that. But I want to teach you the strategy that has allowed me to buy stocks not only at a cheaper price, but get better deals, of course, on them. Create cash flow for me, whether I want it to be weekly, monthly, or quarterly, because I can show you how to make all those differences here. And this is something that's going to be a big game changer for a lot of people, and 99% of the population has no idea about it. But every big Wall Street firm uses these, and they call it insurance, because you are going to sell a premium. And just like you would pay Geico for your auto insurance or your home insurance, is you're going to pay them and nothing happens to your home and they keep your money. Now there's risk, but they minimize that risk with the law of large numbers, if I could speak here. That's how excited I am. So we're going to go to one here that I love. And again, the number one piece of advice with this strategy is make sure it's with a company you want to own. You love that company. There's a reason behind it. And the number one company I like to use as an example is DraftKings. Why? I'm a big football fan. I absolutely love sports. I played them growing up. And I'm a super competitive person. Sorry to anybody that's experienced that. But I like to win. I hate to lose money. I don't know about you guys, but I hate to lose money. But DraftKings football season is upon us. Their numbers over this next quarter should go up. And I think that's something that a lot of people are expecting. And that's why this stock has started to trend over the past, this year, basically year to date. It's gone nothing but go from $12 up to, you look at $29.35. And I believe it was at $31.32. Yeah, we almost hit 32. And yes, I do this exact same strategy with this stock a lot. And my favorite one is Google. I'm going to be 100% upfront and honest with you, but let's teach you what I'm going to do. DraftKings is $29.35 right now. I don't want to buy it at $29.35. That's what everybody else is buying it at. I don't want to buy it at that, even though I want to own this stock. That's the mentality you got to have. I want to own this stock, but I don't want to pay the market price. I don't want to be a sucker, right? No. So you're not a sucker if you buy it here, but well, you might be. But what we're going to do is you got to have options trading on this. Now, we're not buying options, guys. This is the biggest thing. We are going to be the casino or the house or the insurance company, however you want to look at it. There's a law of large numbers here that we're going to use, but we're going to hit trade options. And what this is going to bring you to is a options chain. Now, every single brokerage looks a little bit different. If you go to Yahoo Finance or something, you look at a brokerage or look at a options chain on there, it's going to be a little bit different. Now, there's two types of options. There's a call option and there is a put option. What we want to do for the first part of this strategy is we want to sell a put. Now, the thing you have to have in order to make this strategy work is you have to have enough money to cover it. Now, there's an alternative way to it, and I teach a lot of my students that in order to start with very, very low amounts of money, like maybe $100 or so, there is a way you can do this, and I teach all my students that in my mentorship. I absolutely love my students that are there. We help every single day. I answer questions. Guys, I'm so up close and personal with all my people. You guys get my cell phone number, guys. If you guys can text me whenever you want, I answer. You can ask any of them. But right here, we are going to have DraftKings, and we are going. See, I got text messages coming in right now. I know you guys can hear them. A put. So a put means you're betting that the stock is going to go down if you buy one. Now, what we're going to do is the opposite. We're going to sell it. So what we're going to do is we're going to find, like I said, I don't want to buy it at $29, guys. I'm just not into it for that. And up here is where we can change our amount of days. So this is an important part. You want paid weekly, you want paid monthly, you want paid quarterly. Maybe you only want to do this once a year and just collect it up front. And there's some advantages and disadvantages to that as well. And we go over all that with my mentorship group. But what I like to do and what we're going to do for these, normally I would like to go out about 34 to 45 days, somewhere around in there. It just gives you a lot right now, so I'm gonna go 34 days. Say you know what, we want to get paid monthly. Let's go 27 days. We need a monthly check. Our rent's due every month. Our bills are due every month. We need a monthly check. So what we're gonna do is we're gonna go over here, and again, instead of buying, you got to make sure this button over here is clicked. It's got to go to sell. So all of a sudden, we're gonna flip the script on it. So instead of buying it at $29, we don't want to buy it at that. We want to collect some money on it though. And if it does come down to our number, we absolutely want to buy it, right? It's a fire sale. If this thing comes down to $24 here, like this, boom, we want it. Now, if you guys don't see right here in this highlighted word right here that I have highlighted, chance of profit. Now, if you look at this 24 put, it's got a 90%, it's got, let's see, hold on, let's go back here. What's it saying? We can move this around here. 24 is a 90.86% chance of profit, guys. I mean, those are fantastic odds. Welcome to being the casino rather than playing the casino, guys. The house always wins. Remember that. The house always wins. But $24, and we're going to collect $14. Now, here's the thing. You are going to hold up $2,400 of collateral. Basically, $2,400 that you guys wanted to spend on this stock anyway because you wanted to buy 100 shares of it. Well, this way, you're not buying it at the high. Worst case scenario is you're buying it when this thing dips pretty bad, and you're going to get a good price for it, and you're going to be able to buy it, and then you want to hold it out for longer. Again, that's why buying good companies is a major, major part of this. So, we're going to sell this. We're going to collect $14 no matter what. And guys, there's ways to manage this trade and things like that, but that's way more advanced, and I want to get just the basics down for you guys so you guys can get this and be able to use this and utilize it maybe tomorrow if you want, or paper trade it. Do whatever you need to do. Paper trading is using fake money, but using fake money so you learn the skills. But $14 here, we're going to collect no matter what. In the worst case scenario is we are going to buy it at $24. We're going to buy the stock at $24. And best case scenario of the stock continues to go up because we love this company and it is continuing to go up, we collect $14 fast. If the stock just explodes up, you'll see that this $14 that you sold it to somebody for goes to zero, which means you collect all $14 very, very quickly. And I think that's an amazing thing that not enough people know about because you know your statistics. Now look at this here. Now again, it's going to tell you your max profit is $14. Your max loss is $2,386. Now the only way that happens is if the stock goes to zero and you only have your $14 left. What are the odds of that? Extremely rare, guys. Extremely rare. More than likely not going to happen. So, and this has your break even, but it ain't. That's if the stock goes all the way down to $23.86. I don't think that's going to happen right now. It could. Anything's possible with the markets. But again, that's why we play our odds. Law of large numbers. The more you do this and over time, you're going to collect more premiums, more premiums, more premiums, more premiums, and you're going to be good. And if you do get assigned the stock and you wanted to buy it at $24, well, now you get to hold it forever, and then you get to sell the calls onto it. But again, that's the wheel strategy, and that's more info into it. But again, this is what I'm teaching my students, and I'm able to help, and I've been able to grow my own income doing these things. So it's $14, and again, hey, you think $24 is too low? Let's go up and say you want just an 80% chance of winning. Well, now you're gonna risk a little bit more money, so $2,600, so a couple more $100, but you're gonna collect more than double the premium. You're gonna collect $37 that month off of $2,600. Now, if any of you can find the stock that is a great stock, that's a safe stock, that's going to be able to put $2,600 into it, $2,600, 0.00, and be able to get $37 a month in a dividend, and it's safe, they're not doing anything sketchy, please comment below, let me know, call me as soon as possible. I want to know, I want to look at the company because I'm probably going to buy it. That's just me. That's how my mind works, and if it's a really good company, I'm going to buy it. Most companies that pay that well in dividend stocks, guys, They don't pay this. Just so you guys know, they don't pay this. And just so you guys know, Warren Buffett does this exact strategy. He doesn't advertise it or anything. He keeps it a secret. He doesn't tell everybody. He owns an insurance company, guys. Geico. He owns it. We're just following the same process that he is. Guys, it's amazing. But this is what you're going to do. Then you would hit continue. And we're going to do 1 because we only want 1 in this case scenario. And it tells you 0.37 is actually $37. Just so you guys know, it's not 37 cents. You're going to hit review order. Now, I don't have the funds in this because I literally just took all my money out of Robinhood. Because I'm not going to lie to you guys, I don't love this brokerage. But for people that are new, I suggest you guys learning Robinhood because there's no commissions, there's nothing like that into it. Yeah, I think you pay 30 cents per contract. But if you just go to TD Ameritrade, it's only like 65 cents or something like that per contract. So really, it's not any cheaper. And TD Ameritrade is better charting. It's more advanced. You get more tools. I would recommend you guys going to TD Ameritrade. But for this example, I wanted to be here on this. So we're just going to edit. This is the exact strategy that I use every single week. If I'm not buying T-bills with my useless cash, I am doing this on stocks that I absolutely love. And you will notice when the stock goes down a little bit, you're going to be able to collect even more premium on these and collect more income. That being said, guys, thank you guys all for stopping by, watching this. Again, if you want to learn from me, learn more, and be able to do everything that I teach my students, just hit the link below. We will get started, and I'd be more than happy to help all of you guys out. Again, I will do one-on-one phone calls with you all. Oh, it just reset on me. But yeah, I'll do one-on-one phone calls with you guys all the time. I want to make sure my students succeed, because if you guys don't succeed, I feel like a failure, and I hate losing and failing. Just so you guys know, I'm probably one of the most competitive people you are going to meet, and I absolutely hate losing, so we are not about to let any of you guys lose any more of your money. Thank you guys for watching, and I will see you guys in the next video.